Later this afternoon, Australia's biggest float, QR National, will officially be underway with its prospectus released and the serious spruiking to investors, as opposed to glossy advertising, getting underway. For a preview of that spruiking, I caught up with QR National's chief, Lance Hockridge. Well, Lance Hockridge, we're talking before the prospectus comes out today, so obviously you can't tell me what's in it.
Exactly.
But can you tell me this? When you start marketing QR National as a listed company, will you be presenting it as a turnaround story, that is to say a growth stock, or a utility?
We're presenting it as a growth story, Alan. This is a company with 145 years of history, as you know, as a government-owned enterprise with absolutely first-class resources, the physical resources in the company, 9,500 terrific employees. But the opportunity to take a company like that and to run it the way that it ought to be run, as a commercial enterprise on the one hand, and on the other hand to take advantage of the growth that's going to come from serving the markets that our customers serve, being essentially 80% leverage to the resource sector in Australia.
Well, I want to talk about the growth strategy in a moment, but surely the tracks business is a utility. I mean, are you saying that you don't think that business will be regulated as a utility?
No, it will be, and in fact even over the last week or two we've finalised the next access undertaking, as it's called, with the Queensland Competition Authority that sets out the rules of the game, if I can describe it that way, with respect to how people get access, on what basis and at what tariff, and that clearly is regulated and clearly will continue to be regulated. And it's on that basis that both we as the provider, our competitor, both the existing competitor and any others, and the customers understand with certainty and with precision what the arrangements are by which people can get access to those very strategic 2,300 kilometres of coal track in Queensland.
Right, so you're half a growth business.
No, because even in that business, Alan, we've got tremendous opportunity in the future. So, for example, the largest single project which we have underway at the moment is the Goonyella Abbott Point expansion project, the so-called Northern Missing Link project. We're spending $1.1 billion upgrading that part of the Newlands system, putting in place the link between the Goonyella and the Newlands system, which altogether will lead to the increase in the throughput capacity to 50 million tonnes, which in turn, of course, will match the Abbott Point port capability. So that's just one example of the kind of expansion that is already underway. That work is happening as we speak. And there will be more, of course, to come as the industry continues to grow in Queensland.
So could you briefly give us an outline of your broad corporate strategy?
We are, for the moment, of course, very much a coal company. We have the below rail, as we call it, the infrastructure that we've just spoken about in Queensland. We've got the above rail business in Queensland and in New South Wales. We expect that those businesses will grow and grow strongly, just as the coal business itself will continue to grow strongly in future years. But more than that, Alan, we also have tremendous opportunity, particularly in Western Australia, the existing business that we have there, but we're looking forward to the development of the iron ore business, especially in the southwest and the Yilgarn in Western Australia, and the interstate general freight business, which, whilst in many respects is often seen as the poor cousin, is nevertheless in its own right a significant growth business with, depending on who you talk to, the volumes in that business predicted to double or even treble over the coming years.
And to what extent is your growth in that area likely to come from taking market share off Pacific National, which is owned by Asciano?
I think our strategy is going to be about serving the customers in the business. We've spent a lot of money and a lot of time. We've put in place a new management team over the last couple of years, which has given us an altogether different level of capability in that business. Given that it is a growth business, then of course time will tell as to the extent to which we grow on the back of growth or grow on the back of taking market share, and I'm not going to signal too much about that just now.
But it's fair to say that you're going to be going head-to-head with Pacific National, though.
Absolutely right, as they are with us in the other parts of the business, Alan.
Well, what about diversification, either vertically or horizontally? I mean, are there other ends of the value chain that you could expand into and other forms of freight transport?
We are, and we always will be, first and foremost, a railroad, a very efficient very customer-focused, very commercial rail operation. Already, though, Alan, we understand and appreciate the extent to which what many of our customers look for is a logistics capability. That's why we have, unknown to many people, but a significant road capability already within our business, and that's an example of the sort of thing that you're talking about, that we will say to our customers that to the extent that in association with the provision of these rail freight services we can help you with the logistics at either end of the value chain, then certainly that's the sort of thing that we will look to.
So with that in mind, will you use your greater access to capital as a listed company to make acquisitions?
Whether that happens and how and when, of course, is something that will only unfold in time. The key point that you make, though, is that as a publicly listed company we will have a very strong balance sheet. You will have seen the announcements this week both about our achievement of a strong investment grade rating and the announcement about the debt package that we've got that demonstrates the extent to which we've got funding headroom, which will underwrite the ability to be able to grow this business in the way that we want, and more particularly, of course, our customers are demanding over the next few years.
There's been some discussion about your salary compared to Mark Rosethorn, who's the MD of Asiana. Now, he's on about $3.5 million and you're on less than $1 million. So do you expect a pay rise now?
You'll see again in the offer document that the question of the compensation arrangements for the managing director and indeed for the executive team of the company is set out in detail. What it will show is that it is a conservative but market competitive package. More particularly, Alan, from my point of view, what it will show is that the substantial component of the compensation is going to be at risk, and risk around the delivery of the offer document promises, financial and otherwise.
Okay, but without getting into the actual numbers, is it fair to say that you and the management team will be winners, personally and financially, out of the float?
What it's fair to say is that the compensation arrangements for the executive team at this company will reflect market practice for a company of this scale and complexity.
Right, which is more than you're currently on.
Yes, it is.
How do you think the float will go?
As you appreciate, I did some pre-marketing around the company earlier in the year. We've continued to have very strong reaction, both in Australia and overseas, and of course I'm looking forward after the launch to get out amongst the prospective investors in the company, and as I say, the overwhelming sentiment is positive at the moment, and we're looking forward to being able to deliver on that promise.
Thanks for joining us, Lance Hockridge.
Thank you, Alan.